Hello and welcome to today's update. Today is 17th of October. Today was a very good day in the market. You're looking at S&P 500 futures daily chart. S&P 500 futures was up 2.8% to close at 3686. And Nasdaq futures closed up 3.6% around 11,082. Now, you see this big bullish candle that was formed today that completely engulfed the body of the previous Friday's close. You see over the last 3 days, Thursday, Friday and Saturday, it's been basically creating the same size body candle. But today it closed just above Thursday's close right here. So this candle, today's candle, is actually quite a positive candle because it closed above this candle by a little bit. So this is a positive candle. Now, good thing is that there was no follow through. The concern was after last Friday's negative day that the market would continue to move lower. But there was no follow through. Market reversed completely and engulfed Friday's, the body of Friday's candle. The reason market rallied today was because of what happened in the bond market. So let's quickly have a look at the bond market and then we'll come back and to stocks. So this is the Fed funds futures in April 2023. Now, during the weekend video, we theorized that yields probably have reached a peak. They're near their highs for the time being. The April contract closed on Friday at 4.95, just under 5%. And we theorized that 5% probably is a near-term top until the market receives additional information. If the additional information suggests that inflation is still going to be high and widespread and that Federal Reserve could raise interest rate above 5%, then we could see Fed funds rate move up above 5%. But that we won't know until the next FOMC meeting, which is in early November. So between now and that meeting, there is no reason why the Fed funds rate should go above 5%. I mean, it can go up, but by little bit. But but market is already discounting the fact that we are near the top, because the Federal Reserve at the last FOMC meeting said the terminal rate, they expect the terminal rate to be around 4.75 by the end of first quarter of 2023, and Fed funds futures are actually above that. They're around 5%. They're around 5% because after the CPI report, market is now thinking that Federal Reserve may have to go a little bit above 475, possibly to around 5%, and that's why the Fed funds futures is already there. But in November, if after the Fed meeting, they will probably provide some guidance as to where they see the terminal rate to be. If they said the terminal rate is going to be above 5%, then I can see it go up above 5%, but at that time, not now, because they haven't said anything now. But if at that time they reconfirm that the terminal rate is still expected to be around 4.75, then I can see Fed funds, April Fed funds coming down a little bit, which is around 5% right now. So between now and the November meeting, there is no fundamental reason for Fed funds futures to go significantly above 5%. They can go up a little bit, but I think most likely they're just going to go sideways until that FOMC meeting. And because yields didn't go up today across the yield curve, the market did fall. So if we quickly look at the other rates, so 2-year, today 2-year fell actually 5 basis points to close at 4.45. It had closed around 4.5% on Friday. You can see it pulled back a little bit. Again, we theorized that if the Fed Fund futures are close to the top for the time being, 2-year probably is near the top. It's it closed at 4.5. Maybe it could go up a little bit more to maybe 460, but not much until we get new information, and that may happen. That may come after the next FOMC meeting. So 2-year note fell 4 basis points. So this was positive for the market. What about 10-year? 10-year, although it closed flat, it closed almost unchanged. But during the trading day, it traded as low as 3.9. It had closed on Friday at 4.02. So it traded as low as 3.9, almost 10 basis point lower. And that basically what provided some boost to stocks. And that there was no follow through. Because the stocks were already oversold, right? Because they've been falling for quite some time. So they were oversold. So when the yields didn't go up further, especially 10-year, which is at a critical level, since it didn't push ahead past the 4%, market used this opportunity to basically recover from an oversold level. And that's basically what exactly happened. So the rally started during Asian hours, continued during European hours, and then continued during US hours. And you can see the candle that's been formed. It closed above Thursday's close. So this is a positive looking candle. But this candle is now coming up just to retest the 20-day moving average. You can see it tested this level on Friday and then pulled back. So it's coming back to retest this level. I suspect that this time it might be able to push through the 20-day moving average. I think there is a possibility that the prices could go up and test the 50-day moving average, which is this level. So that would be that would basically bring us to around this level right here, which is around this is S&P 500, which is around 3,800. So that 3,800, you see there is a horizontal resistance here. You also have the 50-day coming down. So I think it is entirely possible to retest the 50-day moving average. But if it's able to close above this level, you see there is a potential double bottom forming. So we'll see what happens in coming days. I'm also noticing that the momentum indicators are starting to move higher. You can see RSI, it's been making a higher low, and then you see it's starting to move higher. So momentum indicators are supporting this rally. You can also see MACD started to move higher, but it still remains below the zero line. So as long as it remains below the zero line, we'd have to assume that the momentum is still weak but improving. So that's why there is room for additional rebound, especially if yields don't back up. If they remain where they are, or 10-year pulls back a little bit, then I think this rally can continue a little bit further. Now on Friday, S&P 500 did close at just above 3,500. 3,500 is an important level. There is no question about it. If you look at it, 3,500 is, you see lots of weekly candles sitting at this level, and there's also a 50% retracement. I think for S&P 500 to break this 3,500 level, there needs to be fundamental catalyst that's gonna that will push it below 3,500, and those catalysts would be either earnings. We're in the midst of earnings season. If the earnings come in below market's expectation and the forward guidance is weak, then that could be one of the catalysts. But I'm not sure that the earnings are going to be below analyst expectation. So far we've seen banks report earnings last week, and they were above market's expectation. They were not spectacular, but they weren't below. I mean, what I mean by below is if the companies actually report losses as opposed to profit, then I could see this 35 level break broken. So earnings would be one fundamental catalyst. The other catalyst I think that can push S&P 500 below 35 would be if the yields continue to rise, especially Now I'm not sure that yields are going to go up much further than where they are, because the Fed funds future is already at 5%. I mean, it has gone from near zero to almost 5% in a very short period of time. That's a lot of interest rate increase. And if Fed funds futures go above 5%, that could have an impact not just on the financial system, but that could slow down the economy quite a bit. So that we could expect a recession which could be deeper than a mild recession that the Federal Reserve is expecting. So as a result, I'm not sure that the yields are going to go up that much more. And I highly doubt that Federal Reserve will come in a couple of weeks' time and say, oh, we expect the Fed funds rate to go up to 5.5%. That would be a lot of interest rate increase. And especially, if you look at UK, where bond yields had gone up quickly in a short period of time, and the pension funds were on the verge of collapse, and the Bank of England had to step in and buy bonds to push yields down. So as long as yields, at least 10-year yield, if the 10-year yield goes up to 4.5%, I can easily see 35 level being breached. And at that time, maybe 3,200 could very well be in play. But as long as yields remain near 4%, maybe it goes up to 410, 415. I don't know that 35 is breached, at least for now. Because the interest rate increases in the market has been having an impact on inflation, because all we're trying to do Fed is trying to do is bring inflation down. If you look at the inflation picture, so you can see that in November, in June, inflation reading was 9.1%. In July, it came down to 8.5, then 8.3. So you can clearly see that inflation is coming down. But it may not be coming down as quickly as many would like. But it is coming down. So if that's the case, then Federal Reserve, as they said, they want to take interest rate up to a certain level, say 4.75 or 5%, and leave it there for a long period of time, so that interest rate has an impact on the economy. Because interest rates take some time to work through the economy, so you have to give it some time. So that's why I'm not sure that yields are going to go up significantly above where they are. So if that's the case, I don't know this 3,500 is going to be breached, at least for the time being. It may eventually breach if we find out that inflation is not coming down. But I think for the time being, 3,500 probably is a good level from which we can expect a relief rally. Because you can see that market had fallen quite a bit. Momentum indicators are weak. So there is room for a bounce to work off some of this oversold level. Over the next couple of weeks, there aren't any significant economic reports. So I think this is an opportunity for market to kind of have a relief rally. And then once we find out in early November what the Fed might be thinking, that's when we have to reassess where market goes, whether we have another leg down, because the Fed might say something which the market may not like. At that time, 3,500 may be breached, depending upon what they say. But between now and then, I don't see any reason why 3,500 should be breached. So that's my view, because in order for that to happen, I would expect 10-year yield to back up quite a bit, maybe to 420, 425. And at the moment, I'm not sure that we're going to get that. But we'll see how things play out. But I think what would drive market right now would be earnings. Because this week we have Netflix, and Wednesday we have Tesla earnings. So those would be the two dominant companies. If they provide gloomy outlook, then obviously it's going to have an impact on the market. And then the week after, we've got other big tech names coming up, releasing their earnings. So earnings between now and end of the month is going to dominate the conversation. So as long as the earnings come in above expectation, I wouldn't expect market to fall, because already expectation is quite low. So I wouldn't expect 3,500 to be breached. So let's see how things proceed in coming days. But at least today's action was positive, and I think there could be some follow through in coming days for S&P 500 to possibly go up and retest the 50-day moving average. If I look at NASDAQ, so this is NASDAQ futures, you can see that this is a positive green candle. It has now engulfed basically the body of Friday's candle. It's now heading towards a retest of the 50-day moving average. Sorry, 20-day moving average. You can see there was a rejection right here. So it's entirely, but I think this time maybe it can push through and retest this 50-day moving average. It hasn't touched the 50-day for a while, so so it is entirely possible for it to test that. And the 50-day moving average basically brings it to this area. So that would be for NASDAQ around 11,700. You see the 50-day coming there. For QQQ and SPY, the corresponding levels would be, for SPY, it would be around 378. And then for QQQ, it would be around 282, 283 level. So that also brings the 50-day moving average. The support for SPY would be last Thursday's low, which is right here around 255. Moving on to the dollar. So dollar, you can see this candle looks weak. In line with the fact that bond may sort of consolidate or pull back a little bit, dollar is sort of showing some weakness, but very much remains within an uptrend. You see the channel is upward sloping. So until and unless the bottom of the channel is breached, the uptrend will be intact. I do notice that the momentum indicators are trending lower. MACD is moving lower, and RSI is also moving lower. So it shows that the momentum is weakening a little bit. So we could see a pullback to the bottom of this channel. So even if it were to come to this channel, it would be fine because it has touched the bottom of the channel here and then rose. So it's entirely possible for it to pull back here and then rise. Until this channel is broken to the downside, we'll have to assume that the uptrend is very much intact. Let's see, VIX. So if we look at VIX, VIX fell 0.65 today to close at 31.37. It's still very high. It's still above 31. So this area 35 level remains the near-term resistance. You can see it reached 35 here. You've got some wicks right here around 35. So 35 is a near-term resistance. If it goes above this, then 37.50 and then 40 comes into play. The near-term previous low was around 28 and 50. So I can see that the momentum indicators are beginning to move lower. So it's entirely possible for it to pull back towards this previous low. Only if it goes below the previous low, things will start to look negative. But for the time being, it's still moving higher, making higher lows. So it's entirely possible for it to pull back a little bit and come and retest this previous lows again. If we look at some of the individual stocks, I wanted to look at some sectors. This is XLC, this is the communication sector. So that's for the first time in a while is beginning to look somewhat positive. If I show you the line chart, you can see what's happening. You can clearly see that it's making a higher low and higher high. So it has now closed above this previous high right here. So it can now go up to this area So this is looking good because the communication stocks like Meta and Google and Netflix provided boost. I mean, it is oversold. Don't get me wrong. It's completely, it's very oversold. It's been coming down quite a bit. So this would be this is a relief rally, much needed relief rally. Only if it closes above this level, we would have to, say that the trend is now becoming positive, because that would mean that it's now taken out a significant, previous high. You can see the momentum indicators are moving higher, so it suggests that they could be a little bit more to the upside. If I look at XLU, if I look at the line chart, you can see that that is also looking positive, at least on a near-term basis. You can see a higher low is confirmed. Very oversold. You can see it's been coming down really, really hard. So this bounce is basically an oversold bounce. Unless some of these highs are taken out, we just have to assume that this is just an oversold bounce. There is a little bit more to the upside. Resistance would be around 65.50 and then around 69. Another beaten down sector, so this is the real estate sector, that also showed a little bit of positivity today. You can see that it consolidated and then closed above the previous high right around here. So there's a resistance right here around 35.50. So again, this is just an oversold bound. Momentum indicators are still quite weak, but improving. You can see RSI is making a higher low. So there is room for additional bounce. If the overall market goes up, I could see the real estate stocks to go up a little bit more. If we look at the individual stock, Tesla, so Tesla was positive day. I mean, it finished very weak on Friday. There was no follow through. It actually rose 7% today. Good to see that Tesla rebounded ahead of earnings release on Wednesday. Now, what we want to do is see Tesla close above this red candle, the high of this candle. 225. If it closes above 225, that would be positive. If I bring in the moving averages, you can see that the moving average is still quite high. So Tesla does have some space to move up and at least touch the moving averages. The 20-day moving average is around 244, and the 50-day, which is the green line, is around 263. So you can see there's still quite a bit of space for Tesla to move up and at least test those. So I could see Tesla going up further. If overall market goes up further, definitely Tesla will move with the overall market. Apple, we talked about this level in the weekend's video, 138. That 138 level held. Friday closed just at that level. So today it was up almost 3%. So this is the important level right here, which was the previous high. So if it can take out this level, the technical picture will start to improve. You see this moving averages coming down. Notice that the two moving averages are now, the gap between them are beginning to widen. So whenever they widen, what happens is stocks tend to move above the lower one. The lower one is 20-day moving average, and then goes up to 20, and that basically starts to narrow the gap between the two. You can see right here, because the two moving averages, as the gap widened, the price moved up above the first one, and that started to bring the two moving averages close to one another. So I could see that happening here. Amazon actually is quite positive. You can see today was up 6.5%, and it's closed just above this area of resistance. I mean, not significantly, marginally. So that's looking positive, at least. Again, this is an oversold bound. RSI was close to 30. So there is the moving averages, which will act as a resistance. You can see right here the 20-day moving average was a resistance. So the 20-day average is around 116.5. So there is a little bit more upside, and the 50 days around 121. So I can see it move up to and retest this previous highs, and that would bring the 50-day in play as well. The support is right around 106, which was last Thursday's low. If we look at Microsoft, again, so it also had a good day, was up almost 4%. So it closed above Thursday's high, so that's positive. You want to see higher highs, so and higher low, and that's basically what happened in Microsoft. So it closed just below the 20-day moving average. So if it can get through this 20-day moving average, it can go up to this 250, this level, the previous highs, which is around 250, and that's where the 50-day moving average is sitting. I can see the momentum indicators, RSI and MACD, are starting to move higher. So that would support additional move higher. Let's see, Google also had a good day, up 3.7%. So you can see that there's a double bottom being formed around 96. So this is a important level, 102.50-ish. If it's able to get through this level, then the 50-day moving average comes into play, which is around 105.50. Only after, if it's able to take out the 50-day, the technical picture will start to improve. It's looking constructive. So first, we need to see it go above this 102.50, because then that completes this double bottom. So let's have a look at Netflix ahead of tomorrow's earnings. So here's Netflix. So let's just zoom out. Okay, so this is Netflix. I'll just remove some of the moving average so we can see, right? So you see there's a resistance right here around 251. So it's been bouncing from the bottom of this channel, and it touched the top of the channel. It's good to see that the stock showing some strength ahead of tomorrow's earnings. Now the thing is, this is one of the problem with Netflix is that after the last two earnings, it just got clobbered. You see right here, this big gap was after the previous earning, and then you see another big gap. These two were after the earnings releases, the two earnings releases. So that's why I'm a bit nervous about Netflix, because it has a history of selling off after the earnings release. So the question is whether we're going to see a repeat of what happened the last two times, or can it actually break out of this 251 level and start to close some of this gap. Well, we'll find out tomorrow after the close whether or not stock can react positively. But it is showing strength, going into the earnings release. Well, thank you very much for today's update, for watching the video. If you like the information, please consider subscribing and sharing. Thank you very much.